0.8% down. We were down 1.7%. Resources coming under significant pressure. Oil falling off a cliff. What exactly is going on?
Well, we're in a bit of a double whammy scenario. We've got a much weaker dollar, which usually means resource prices should be going up. But unfortunately, we're having a massive sell-off in resources as well. So we're having a double whammy for our resource producers in South Africa. So that's why we've got Exxaro right at the bottom here, followed by Impala, Lonmin, Anglo Platinum's there. So generally, resource share prices coming off tremendously today because of the pressure from the decrease in the commodity prices and the weaker American dollar at the moment.
Well, it's actually the dollar's actually reversed its
But generally speaking, it's incredibly weak. I think it's reversed today because obviously the ECB came out and said rates are going to remain the same. As soon as that happened, we saw a complete reversal there actually. But overall though, in general, the US dollar incredibly weak against the euro and other major currencies in the world, and that certainly is having an impact on the markets.
Well, this kind of volatility, I spoke to you a little earlier and you sounded relatively excited because perhaps, you know, that's not an overstatement. I mean, is this a time to buy, to get into the market? What would you be doing?
I like volatile markets because they give me an opportunity to put new money in the market. It's very difficult to find a home for new money. I mean, you have very limited options. It's either cash in the bank, a government bond, a property, or the market. And in my opinion, the market is still the best place to be. Your returns still are much higher than in the other asset classes. Naturally, you take on the risk, but you know, nothing ventured, nothing gained. So any major dip in the market, I'm quite excited about because I do feel that there is real value there, and I still feel very strongly, and I always have. Since I came on this show, I really like your resource shares, and I really think the pullbacks that we've seen in companies like Billiton and Anglos are starting to look very juicy with regards to potentially new buying opportunities.
So essentially you wouldn't be buying into the all-share index or the top 40 per se, you'd rather be buying into specific
Yeah, I'm
companies.
very specific, absolutely.
Okay, well let's delve into some of the big losers today. I mean, Anglo Platinum down 2%, Lonmin down 2.5%, Implats shedding ground as well. Exxaro, you mentioned, down almost 3% today. You mentioned BHP, Billiton as well, some stocks looking relatively juicy.
Correct.
What have you been doing over the last couple of trading sessions? I mean, JSE all-share was down 1.7%.
Well, I've been waiting, thankfully. The JSE's been hitting a bit of a brick wall at 32,800, 32,900. We've seen that quite a few days in a row. We've now seen pretty decent pullback. We're at about 4.85% pullback from where we are now. Support is kicking in at 31,400, and that's something that we saw today. Markets dipped a little bit below, but we saw a rally at the end of business and closing above that critical 31,400 points. So I've waited a little while, and I'm using this as a leg in the door opportunity, you know, just picking up a couple of stocks here and there before actually completely going in, because obviously no one can tell the future. No one knows what's going to happen tonight with American closes and Asian markets opening in the morning. But I'm hoping and I'm feeling very strongly about good opportunities on those resource shares, and I'm getting involved in them at the moment.
Well, some would argue that we are in a very volatile stage on the markets, and we don't really know where things are headed. But when you look at the JSE, which is sitting at 31,582, are you confident that we're going to be way above that by the end of the year? Because some seem to be selling a bit out of equities in anticipation for quite a significant dip.
Yes, I think, look, the general view of most of the houses is probably a market in the region of 33 to 34,000 points by the end of the year. I mean, that's really just very difficult to predict. I mean, no one actually knows. But, you know, if one really delves into it and has a look at the actual fundamentals of our market being mainly based on resource shares because they have the highest weighting in our markets, I do feel very confident that those are at incredibly good values at the moment and have a high possibility of increasing going forward. They remain volatile naturally, so there will be this whole sell in May and go away scenario maybe that we are seeing at the moment. But, you know, in 2 months' time we could be praising ourselves on how well the stocks have done. It's really a fundamental decision that I've based my decision on. It's not really just a feeling at the moment. So I would say solid value there starting to creep into markets.
Let's delve into Harmony, down 1.3% today at 92.75 cents.
That's run very hard recently.
Yeah, of course.
And the gold price is off and so on. So
and
it's
we
only
know the
natural.
wealthy gold pool assets and things like that as well, but also falling short of the third quarter estimates as well. Third quarter headline earnings per share, 91 cents versus 97.3 cents.
Look, the story for Harmony is good if one looks into it. I mean, the projects that they've got in New Guinea are potentially massive for the business. That is a much longer term story. I think the future of the company in the short term relies on their operations in South Africa. And they have some significantly good operations in South Africa, but because the operations are in South Africa, you've got that inherent issue where you have to be very concerned about costs. and that's the costs involved with labor and with regards to electricity and so on, as well as a very, very strong rand. I know the gold price has really shot through the roof, but we really have to look at the rand price of gold, and that is up, granted. But the worry is it going up enough to cover the increases in costs that we will definitely be seeing coming through? I mean, very recently we've had another electricity price increase of 25%. It's not as much for industrial and resource users, but still that is a significant issue. And that's really what's prevented me from being interested in investing in gold companies in general.
So
It's not something I've really looked at. It probably does, but I look at the fundamentals and I look at it, it just doesn't make sense for me. I would be far happier buying a BHP bulletin where I'm getting a diversified group of metals, and they are base metals. The costs involved are a lot less than going directly for a platinum company or a gold company at the moment.
We've got Sasol that was down almost 2% at 198 Rand and 90. Oh no,
no, it's
me. So what I'm saying, 354
I wish it would be a great buy.
I know. I was going to say, wow, I should buy into the stock as well. But Sasol, quite an interesting stock, given the fact that we had oil prices. We have oil prices down to the tune of around 5%. Would Sasol be one of the buys for you at
Absolutely.
this point?
I love Sasol. I think that company's got a new life in it at the moment. I mean, you need to understand where it's been. I mean, in 2006, 2007, we had a stock price that I believe was above 500 Rand, and they've gone through a lot and they've battled through a lot as well. But if they can keep their costs under control, and if the Rand can probably depreciate a little bit, maybe to above 7 Rand to the dollar, they really are pumping and making a lot of money. So at below 360 Rand a share, I'm very, very interested in Sasol, absolutely.
Well, going forward, we've got a lot of worries about the US. We have housing numbers which weren't that fantastic. We've got the ISM non-manufacturing numbers.
It's a difficult market. It's like landmines everywhere.
So, I mean, are you seeing these landmines as potentially inhibiting for future growth, or do you think that
Look, there's no doubt
it's
that
okay?
It's a concern. It's a risk, but these markets are shrugging it off completely. I think. Yeah, I mean, you've got issues everywhere. When you look at it on one side, you're very depressed about what's happening in the market. But if you can turn it around its head and look at all the positives that are coming through, you tend to be fairly bullish about the general story. So that's why I think it's very important to be very stock specific in what you're picking up, rather than just getting a basket of goods and going for an ETF on, like, say, the top 40, for example, is be very specific in picking your stocks. And in our opinion, as it's been, we're still very interested in commodity producers and in companies that have great exposure to emerging markets, because I think that's where the growth really is going to come from. We're seeing very low growth coming out of America. We're seeing subdued growth coming out of Europe. And those are two economies that have kind of turned the corner for the moment, but they're chugging along and they are finding great difficulty. But if we still look towards the east, things there are heating up so much that the governments are concerned about inflation and they are increasing the interest rates. So in the short term, that scares everybody, but if you have a look at how amazing that actually is, and if you can go for companies that will benefit from that growth, because don't forget, that's half the world's population still on that side that we tend to forget about every now and again. We tend to be very concerned with what's happening in America and what's happening in Europe, but there are many companies that benefit from the growth coming out of the east that I think we need to be concerned about. And if you can position your money there, I think you'll still be pretty much okay.